Howdy, folks, and welcome to the Daily Coin. My name is Rory, and I have on the line today Dave Kranzler of investmentresearchdynamics.com. And Dave and I are going to cover gold, the housing market, and silver, the silver fix in particular. And without any further ado, I welcome Dave Kranzler to the show. Thank you so much for listening. How's everything going?
Not too bad, all things considered, considering how corrupt our world is becoming.
It's incredible, isn't it? I mean, it seems like every day there's some new deep-seated criminality that surfaces.
Well, the amazing thing is that these guys who are manipulating the markets, especially the precious metals, they don't even try to hide it anymore. I mean, it's just as blatant, as anything could be.
It's pretty much in your face, and we don't care.
Right, exactly. It's almost like they're flaunting the fact that they can conduct their criminality and no one's going to stop them because they're the ones who are basically in charge of stopping the criminals.
Yeah, exactly. Well, I mean, it's I was listening to somebody yesterday, I believe, and they were saying, that J.P. Morgan tells the CFTC what to do, or just get lost.
Oh, I'm sure they do. I mean, a lot of those people who are on the CFTC worked on Wall Street anyway. So,
Yep.
Everything's been carefully crafted. It's just like, Eric Holder was intentionally put into the chief law enforcement job of the country because he was the one who was keeping the criminals on Wall Street out of jail. I mean, the more that I've kind of understood the law firm that he was a partner of out of D.C. I mean, when you really dig down into the history of the place, it reminds you of that Grisham novel, The Firm.
Really? Okay.
Yeah, it's frightening. Like I think his Covington Burling, I think his law firm is probably kind of sort of secretly or clandestinely maybe the most powerful law firm in the country. You think it's like these big Wall Street law firms that everyone knows the names of in New York, but I think it's actually Covington Burling. And of course, it's a law firm that most people wouldn't have heard of. I mean, everyone's heard of Dewey Ballantyne, Debevoise Plimpton, Guile Watchall, all that stuff, but no one's, most people probably haven't heard of Eric Holder's law firm.
Never heard of him. I can
there you go. If you Google it, you'll start to see what I mean.
Okay, I will do that. See where Mr. Holder was getting some of his training from.
Oh, he was the chief legal counsel for J.P. Morgan, and he was basically, his charge was to keep them out of trouble.
And still is.
Exactly.
He just does it on the national scale instead of individual.
He does the authority of the federal government behind him.
There you have it. Well, I wanted to ask you. I just popped over to your website, and you've got this new article. The world is running out of gold to mine. That is a very interesting headline, and I started reading into it, and apparently there's not very much left in the ground.
Well, I mean, it's hard to know for sure what exactly is left in the ground. There hasn't been a major deposit discovered, I want to say, in at least 10 years. And I used to know the numbers off the top of my head, but it's been a really long time since a major deposit being 10 million ounces. Normally like Newmont or Barrick, they won't even bother with something unless it's at least 5 million ounces. And I'm not even sure anything of that size has been discovered. I mean, some of these juniors may be digging holes in areas where they may find something that of that size, but there's not an official resource report that confirms, measured resource in the ground of that size. So the other thing that's happened, and I was actually on the phone yesterday with a mining company executive going over the story of his company. And before we got into that, we were talking about how one of the things all these large mining companies like Goldcorp and Barrick and Newmont have done is they basically high graded their existing mines. with the price of gold so low in order to try and maximize revenue. So what they've done is they've taken all of their highest grade that they have in their big mines, and they've worked overtime to try and turn that out and produce it and sell it, so that with the lower prices, you know, they can add, it doesn't hurt their revenues as much. But what they're left with is big mines that really only have low grade deposits left. That's much more expensive to get out of the ground. So we might, even if gold pops up here into, several $100s over the next several months, we may start to see, continued bad numbers out of these mining companies, because they're going to be processing much lower grade ore that has a higher cost of processing.
Yeah, in the article that you posted, it says that there's only 0.005 parts per million gold in the Earth's crust compared to 50 parts per million for copper. And it says miners had to blast away 100 metric tons of rock to find just an ounce of the good stuff.
Oh yeah, that was in one specific case for sure.
But isn't that becoming more of the norm?
Yeah, well, it will be. It will be going forward. Yeah, absolutely. There's actually, and this information came from Stephen Lieb, who said he heard it on the ground from his sources in China. And to me, it's an indication of where we could see, sort of an intermediate term target for the price of gold. I remember he had mentioned that he had heard that, China's mines 400 tons a year now, and he had heard that, a lot of their mines are deep underground mines, and it's lower grade and it's expensive to get it out of the ground. But he said he had heard that they're actually pulling gold out of the ground at a cost of $2,500 an ounce, because they just want to get the gold. They want to get the gold up and out and in a visible supply for whatever they're going to use it for at some point down the road.
Like a gold back yuan.
Exactly. And, to me, if that in fact is true, I mean, it tells you, it gives you an indication of how rare the high grade, low cost gold is becoming.
Well,
and it gives you an indication of where they think the price of gold is going, because they're not going to pull that gold out of the ground if they think they're going to lose money on it over time.
Right. I mean, you wouldn't pay $2,500 an ounce to get it out if you didn't think it was going to go to 4,000.
It would pay off, exactly.
I mean,
so,
and it isn't like Barrick and Newmont and the other big players, aren't they operating at a loss at this point?
Yeah, it's hard to say. I mean, I don't really look at their numbers anymore. I see the headlines, and I look at their revenues. I don't think they're operating at a loss. I think they've shuttered a lot of their production that would be, cost more to get out of the ground than they can sell it for. So they're definitely operating on much thinner margins. A lot of the losses that get reported are big asset write-downs. Like Barrick took a huge write-down for that Pascua Lama property down in South America that they basically they've already spent billions more than they had originally projected to try and get it open, and now it's stalled because the government down there, Argentina, is basically imposing stricter environmental controls. Apparently, Barrick was a 600-pound elephant in a china shop down there, violating environmental laws, etc., which doesn't surprise me. I mean, it's an abusive company to begin with. So a lot of the losses that you're seeing are these big companies basically writing down assets they overpaid for over the last few years. It's one of these typical big company things where when things are bad, they take write-downs of everything, and just put it all into a couple quarters, so that going forward, if things get better, then they can start writing those assets back up and show nice earnings pops from that. I mean, the banks have been doing the same thing for the last several years. They wrote everything down in 2008, 2009. FASB changed the accounting laws for them. The SEC signed off on it, and now they're writing everything up to market, which, three-quarters of it probably is worth 50 cents on the dollar, but they're writing it up mark to market because that allows them to release gap gap accounting earnings into their net income.
So it's just yet another ledger sheet trick.
There's fraud embedded in every aspect of our country, man.
It's unbelievable.
Yep.
It really is. You've been doing a lot of writing lately about the housing market and painting a fairly grim picture. But where I live, Dave, there is no inventory, and prices are going up all the time. And my wife and I, we've been looking for a house for almost a year and can't find what we want where we want. So I'm a little it's a little confusing to me, because according to my neighborhood, the housing market, it's scary, to be perfectly honest, because it's like, okay, I've seen this movie before, and I'm not sure what's actually going on. Are you looking at more of a bigger picture,
Well,
or you?
you gotta when you look at the housing market, you gotta look at nationwide. You can't, I can show you probably some specific neighborhoods that never got hit much in price when the housing bubble popped. There's going to always be pockets where if you live in an area, a little small little pocket where everyone has a stable job and they're not concerned about the value of their house and they've been able to continue to make their mortgage payment, they haven't been foreclosed on and they have no reason to sell, especially if they believe the market's coming back. Yeah, no, there's for sure going to be pockets where there's very, very low inventory and a very high level of stability, but those are outliers.
Okay.
Those are extreme outliers. And when you say there's no inventory, you're probably looking at the MLS inventory that your real estate broker is showing you. Why don't you call around to some of the banks and see if they're sitting on any foreclosed homes that they want to unload? Because seriously, the banks have, even throughout this whole thing, the banks have been able to transfer a lot of their REO, their real estate owned, which is what you call the homes that they take possession of when they foreclose a home. They've been able to transfer a lot of that onto the balance sheets of these private equity investors and hedge funds who have gone around and put up portfolios of buy to rent homes. But the banks are still sitting on a very high percentage of REO. I haven't seen a number in quite some time, and that's probably intentional. But I remember I did an article on the housing market. I guess it was late 2012, early 2013, and I had found a source article that said that banks were sitting on 90% of their REO. Now that would have been 19 months ago, a little bit longer than that when the source data was put together. And since then, we've had this big wave of investment buyers who cleaned a significant portion of that up. But I can guarantee you, on average and in general, the big banks are still sitting on a lot of REO. And also the foreclosure rates, and again, these are lagged a little bit, but foreclosure rates are starting to go up again.
Which is always an indication.
Ready to just do a wash, rinse, repeat of the cycle that we went through previously. Now that the foreclosure cycle won't be anywhere near as bad because most of the people who couldn't afford to make their payments got foreclosed on. But it also takes, the average time to foreclosure right now is 3 years. So that means you could buy a house today, default on the mortgage next month, and you can basically live rent free for 3 years, and especially if you're living in an area where you don't have HOA dues. Pretty much all you got to do to keep the house is just pay your real estate taxes. And you probably don't even need to do that. So, they really slowed down the foreclosure process, and they used that mortgage foreclosure scandal as the cover story to basically stretch out the foreclosure process because the banks were choking on inventory.
Yes. Now I do remember that.
Right.
Everything slowing down. So that's still, so they're still just releasing the foreclosed inventory at a trickle. Is that what you're saying?
Exactly.
Okay.
And a lot of the homes that these big investment buyers bought came from Fannie and Freddie. And the government was providing, you can do the research on this, and I may have linked it in some of my articles on Seeking Alpha. The government had put in a program that was not widely publicized that was giving 0% financing to these big investment funds to buy Fannie and Freddie homes, and you had to meet certain wealth and size qualifications to qualify for the auction programs that the government was conducting using this 0% financing. So it was basically only the large institutions like BlackRock who could even bid on these homes.
So really, it was just a way of transferring to people that could basically flip them and either rent them or sell them at a loss, or
Well, I don't
not
think
necessarily at a
that's something that's
loss.
lost yet, but yeah, it was basically a way to transfer. Fannie and Freddie had a huge REO problem, and that took care of the REO problem. So it transferred a lot of Fannie and Freddie foreclosed inventory onto these investment buyers, where they'd go into these lower income areas and just sweep up whole neighborhoods of homes that have been foreclosed on. But to get back to your point, again, it depends on what part of the area of the world or the country that you're looking in as to where there's supply and there isn't supply. Another suggestion that I would offer up for your particular neighborhood, and I think this is true across the country, you still have a significant percentage of people with mortgages who are underwater, even though we've had these big price increases. The price increases that you're seeing that get published in Case-Shiller and things like that, it overweights the very low end of the market where you have had high percentage price increases. It isn't even back to where it was in the peak of 2007. So the high end isn't seeing the price increases that you've seen in on average that gets published and makes the headlines.
Okay.
But so you probably have like in your area where it's probably upper middle to upper demographic homes, a lot of those people are still underwater. They're not going to sell, and they're making enough money where they can comfortably afford to make their monthly housing payments and still live a nice lifestyle. Make their leased Mercedes payments every month, so they have no reason to sell. And if they did sell, they'd probably be selling at a loss.
Well, and I think that probably is the case here because the upper end, I don't think that there's I don't think there's anything going on there at all. Once you get over, about 500,000 homes, I don't think that there's much going on with that.
Well, there is some, but not much. The National Association of Realtors, they put out a monthly slideshow with their monthly existing home sales report, and it breaks out the percentage change in sales from a year ago by price bucket.
Okay.
And you can see that essentially everything from 500,000 and below, you've had huge declines in the percentage number of sales in those price buckets. There was a 0.2% in the 250 to 500K bucket. And I would argue that that's all flippers. And then there's been, like in the million plus bucket, there's been a 5.2% increase. Now that's year over year, so from April to April. I don't know what the number is. I don't even know if you can get the number that would be from March to April. Right. So like in your neighborhood, you probably have a lot of your neighbors who are still underwater or they have no reason to sell. They got comfortable jobs, they got comfortable income, and they have, and they're not in a position where they're going to move up. They're certainly not going to move down because if they sold, they'd have to sell at a loss. So there are going to be areas where you're going to have very low inventories because the potential sellers, and this is part of what makes up the so-called shadow inventory. These are kind of zombie mortgage holders. They're people who are underwater on their house, and they might sell if they could sell at a profit and move into something and not have any out-of-pocket expenses. Maybe downsize or downgrade, but they can't sell because when you take into account all of the transaction costs, broker fees, moving costs, etc., they'd lose money on the sale, so they just don't list their house.
You're probably right. I mean, that's probably is a big part of what's going on right here in my neighborhood, and part of the reason for the low inventory. I want to go back to gold and silver, and the silver fix, which is going away in mid-August. And I contend that it won't matter, that it will have no effect one way or the other, because the Rothschilds and the other criminal banksters, they're making they're making way too much money to allow anything to happen. I just think that's going to change. I mean, with all the naked shorting going on and manipulating the price up and down, I mean, what effect, if any, do you see this having on the silver market or the gold market if the gold fix goes away? Will it change anything?
Interesting you bring that up because I've kind of felt all along closing down the silver fix was kind of meaningless. I mean,
Yeah,
there was only two banks left on it, and the LBMA had stopped publishing the SciFi, the silver forward rates in, I believe, 2011. So they've basically been snuffing out any kind of meaningful information connected to the silver market for quite some time. And I honestly think that closing down the silver fix was a move designed to sort of placate the regulators over in London and from Germany, and
yeah,
especially the German regulators, I think, are putting a lot of pressure on them from behind the scenes. And I think the evidence of that is the fact that Deutsche Bank basically pulled out of the fix after they couldn't sell their seat. I mean, you would think if they weren't worried about the regulators and what's going to happen to them, they would have at least tried to hold on to the seat and sell it. I don't think they're going to shut down the gold fix. I really don't, because it's just like you say, it's too profitable of a manipulative tool. And what I find interesting about the whole topic is that everyone is saying, well, if they close it down, what are they going to use to replace it? And my response to that is, why do you need anything to replace the fix? Why do you need a benchmark reference price? Every time there's a trade in the market, there's a benchmark reference price that's established, and it's established whether the market's rigged or not. It's at least established by a bona fide buyer and seller, right?
exactly.
And the market trades 23 hours a day continuously, either in open auction form or in electronic contract form.
Yep.
So what do you need to fix a benchmark reference price for? That's a BS cover story that the Rothschilds put in place back in 1919 when they formalized the London Gold Fix process to begin with. And if you look at the Shanghai Gold Exchange, they don't publish a benchmark fixing price. And the Shanghai Gold Exchange is the largest physical bullion exchange in the world now. So to me, just the idea that something needs to replace the gold fix if they shut it down is just absurd. Why shut it down to begin with? Just let it go, because it's not going to stop the manipulation of the gold market.
Right. I mean, when you've got the naked shorting going on, what does it matter?
Right. If they want to stop the manipulation of the gold market, let's shut down the COMEX.
Exactly.
Let's make gold a physical only market, and maybe, you could have a small futures market that allows bona fide producers to hedge their production, which is the original intent of commodities futures to begin with. It was established as a financing mechanism to let farmers pre-sell their crops so that they could raise the money to cover the expenses of planting the crops. You don't even need gold and silver futures. In fact, the gold futures weren't even established as a market until after Nixon had closed the gold window, and they figured out that they could start up gold futures trading as a tool to manipulate the market. So you want to curtail the manipulation of the market. Let's eliminate gold futures trading.
Do you think that the Shanghai Gold Exchange and the Dubai and the new Moscow Exchange and the Singapore Exchange, do you think that they're going to overwhelm what's going on? I mean, are they going to just naturally become the pricing mechanism?
I think over time they will. Yeah, I think over time the COMEX will be exposed for the fraud that it is, and it's going to blow up at some point. I mean, I will not put a time frame on that, because these guys have kept this scheme going a lot longer than I expected that they could. So it's kind of self-defeating to come out and put a time frame on when it's going to eventually blow up. But yeah, I think it will eventually.
Well, I think that time is running short. I mean, I like you, I don't have a crystal ball, and so I have no idea when it's going to happen. But I think that with the physical demand that has become Asia and India, I mean, just those two countries alone. I mean, my goodness, they're taking everything that's coming out of the ground and
Oh,
then
I
some.
agree. And now India is going to start kicking in.
Exactly. I mean, it's
It's definitely going to be interesting to see how this thing develops, over the summer and through the big seasonal buying period that kicks in late August for India.
I mean, do you think that there's anything coming out of the ground of note at this point? I mean, do you think that the mining numbers are going to are they going to fall off a cliff I mean, or,
I don't think they'll fall off a cliff. I mean, I don't trust the statistics the World Gold Council puts out, but
no,
let's just say that you're probably running at about 2,300, 2,400 tons of production right now on an annualized basis. That's been a pretty stable number for as long as this bull market's been going on. And then you have, like, I don't know, another 17 or 1,800 tons through recycling, cash for gold, and all that other stuff.
right.
So I don't know if I think the supply is declining, but I don't think it necessarily falls off a cliff right away. You had a big push in the say up until 2011 when the juniors, well, really, the juniors kind of ran out of money in the 2008 crash, manipulated crash. But there's a big universe of juniors that have discovered a lot of smaller deposits, and some of those deposits, million ounce and less deposits. Some of those deposits have been snapped up by the big guys, and they're producing out of them. So that's somewhat replaced the fall off in the production from the big elephant sized mines.
Okay.
Really, what you're seeing is the demand is overwhelming all of the available supply, and that's why we've seen GLD, which was plundered for 550 tons essentially in 2013, and it continues to get plundered. Just last night, another 3 or 4 tons was removed. It took it down to 776 tons that they're reporting to be held in GLD. And the last time it was at that level was December 26th, 2008.
Wow.
And London was closed on that day, but on December 24th, the London fixed close was $835 an ounce.
Oh, my.
So now you're basically at the same level on GLD in terms of the amount of gold that's in the trust, and yet the price of gold is more than 50% higher than it was the last time the level of GLD was at this tonnage level. So what does that tell you?
Something is wrong.
Exactly.
Something is very wrong, actually.
Exactly.
I'm not going to take up any more of your time, Dave, and I certainly appreciate everything all of your time this afternoon. I really do. But I do want to ask you this in closing. What's it like working with Dr. Paul Craig Roberts?
He is. I'm amazed every time we write an article. I'm amazed at how bright he is and his insight into what's going on. And he's a very straightforward, genuine guy, and one of the few guys from sort of the old school pre-Clinton days. When I think some government employees still cared about what was going on in this country, he's one of the few guys out there that's actually coming out and laying the truth on the table. And what's so great about it is the degree of credibility it has, because he was behind the curtain.
Yes.
So he knows how the politics operate and how things work. So when he says something is going on, you can probably be pretty certain it is going on. It's not a conspiracy theory.
Yeah, well, as I tell people all the time, I don't have time for theories. I got too many facts to deal with.
Right, exactly.
And Dave, and I want to tell you that I believe that you are cut from the same mold, and that you are very genuine, very straight up, and I love talking to you. I'm very very grateful that you do spend time with me, and I just want you to know that. I mean, I really respect what you're doing and the work that you do. I think that it's awesome. I really do. So, and
Thanks,
I just
Rory. I appreciate the feedback, and believe me, I'm thankful that you take the time to have these conversations. I don't mind doing it at all.
Well, we'll do it again in probably another 5 or 6 weeks if you're okay with that.
Just let me know. Just shoot me an email.
All right, buddy, and I certainly appreciate it, and I will talk with you soon.
That sounds great, Rory.
All right, thank you so much.
Bye.
Bye bye.